Welcome to TheoTrade. This is Don Kaufman. It's February 14th, 2024. We are just seconds to go to the cash close here on this Wednesday afternoon. S&P's rocking to the upside. NASDAQ up some 200. But at the exact same time, I'm going to tell you, cracks are forming in this marketplace. There's volatility and bearishness starting to emerge. And of course, that's a lot to say right up front when you're like, oh, what are you talking about? Yesterday, yesterday at points in the day, S&Ps were down over 100. Yeah, they rallied back. And today, the rally, it is on fire. But as I said a moment ago, there's definitely some volatility and some bearishness starting to emerge. I mean, this marketplace, it's been all about Nvidia. It's been all about Meta. But again, I'm going to show you precisely what I see as we come into, of course, today's cash close. Let's go for kind of a top-down approach. First on the docket here, let's go to the SPX, the mother of all products. One of the most critical, there's the closing bell. One of the most critical aspects, of trade throughout the course of this week, as I kind of zoom into this, is, well, it's the SPX expected move. And one of the things that we're seeing right now is, obviously on Monday, it's kind of a nominal day. Tuesday, we were rocking to the downside. CPI took us way outside the expected move. We rallied back just shy of the expected move. And here we are on Wednesday. And again, on this Wednesday, I want to take you in some of the intraday trade. So on an intraday basis, this is actually our open today. We rallied a little bit, faded directly into the lower edge of the expected move. Now, mind you, this is a critical level, 49.61. Now, that is SPX. Again, the mother of all products, SPX, 49.61. Why is that so critical? It is the lower edge of the expected move. We tagged it earlier today and actually got bid back on it, First of all, that is an area of concern literally in tomorrow. If we're going to back off at all, mark it on your screen. What is it? It's about 40 handles south of where we're presently trading. But that's going to be a critical level. If we do start to see some more sell side activity, we should actually hold the 49.61. If we don't, that's where things just get absolutely turbulent and wild to the downside. Nevertheless, keep it, kind of in the back of your mind. So why am I talking about, a little volatility coming through, a little bearishness, some cracks in the marketplace? Look around, Even a major tech stock like Apple. So we're just going to jump right to Apple next, Some sell side activity in here. In fact, Apple is actually down now on the year. You're like, whatever, man. It's only one stock. Moreover, Apple is cracking way outside, the lower edge of its expected move. The reason I am bringing up Apple, and I've been doing this extensively lately to display the marketplace as a whole. We'll cruise over to the spiders for a second. The marketplace as a whole, some pretty strong rally. I mean, do you really want to fade that? No, but we're right now, as I say, we're seeing some cracks forming. And a stock like Apple, clearly one of the largest market caps, it's pretty much neck and neck right now, and Microsoft is kind of overtaking it. But Apple being down is kicking another leg out from under the marketplace. I mean, what else do we really have to stand on right now? Today, nice little bit of a bounce back inside of the financials. You look at those, on a weekly basis. The financials are massively unchanged on the week. Yes, they supported the marketplace to some degree, but they're unchanged in the week. It's not exactly like a strong area of hope. Meanwhile, if you take a look at the energy sector, it actually rotated back down today. It too is massively unchanged in the week, right? As I said, Apple, that kind of market cap at a $3 trillion market cap, look, you just have to simply pay attention to it, Because again, the marketplace right now, there's just not much to go on other than it continues to be Nvidia. It continues to be Meta. Meta, hits the lower edge of the expected move yesterday, All right, now we're actually up on the week. Nvidia, it is still completely unscathed. And I mention that simply because even in yesterday's Mr. Toad's wild ride of trading session yesterday, Nvidia is unscathed. And Nvidia, okay, along with some Meta, that's it. They're holding up the entire market where you're seeing, again, other areas like Apple, for instance, get that other leg kicked out, which, as I've brought up on this past weekend, okay, on the update, how few stocks are really involved anymore. You know, I've said time and again now, Nvidia becomes the most dangerous stock ever in the S&P 500. Meta's not far behind with it because when it comes down to it, really, okay, in terms of significant market caps, what else do you really have? And of course, you're going to point to, well, of course, Microsoft in here, and Microsoft on year-to-date basis. Yeah, you got me there. It's up 10%, okay? But it did not get out of yesterday's trade unscathed. In fact, if you look at Microsoft from an expected move point of view, it's not just outside, it's way outside, okay, that weekly expected move. That is not a pretty picture. So we already kind of lost Microsoft on the week. Apple, as I just showed you, okay, very similar look to Microsoft. So you kick the leg out of there. You realize that the two of those put together is $6 trillion of market cap. But it doesn't make a difference. And I'm going to tell you why it doesn't make a difference. Because Apple's at a 20 vol. Nvidia, okay, and this is critical. This is on the test. Nvidia now is sitting over a 60 vol. So when you look at Nvidia, and Nvidia being, it's in the tune now, well, every day you have to look at this because it was, 1.8 trillion and change. There you go. Now it's a little over 1.8 trillion and change, but it's 1.8 trillion with 3 times the volatility. So you can actually compare Nvidia directly, okay, to an Apple or a Microsoft, all right? And it being bid, along with Meta being bid, is enough to sustain the marketplace. The irony is, and then there were 2. Now, the other aspect about Nvidia, you realize that today it overtook Google, okay, in terms of market cap. So just the other day, we were actually talking about the fact that, here, take a look at Amazon. Amazon now has a smaller market cap, okay, at 1.77 trillion. Take a look at Google. Google is about 1.81 trillion, okay? What do you have right now? I'll tell you what you have. You have Nvidia is now the 3rd largest company out there, but it's the 3rd largest company, okay, with 3 times the volatility. So in effect, I think you can make a very clean argument, okay, that one Nvidia is worth way more, for instance, than one Apple or Microsoft. In fact, you can say Nvidia, with about a $1.8 trillion market cap, having 3 times the vol, okay, is close to almost the same market cap if you had volatility adjusted as Apple and Microsoft combined. The danger continues to grow. Moreover, we also picked up on, of course, and I don't know what it's going to be today, but yesterday had the 2nd highest SKEW print on record. Now, if you don't speak geek SKEW, all right, what is it? If you go to the SPX, and actually take a look at the options chain, about 30 days out, okay, what SKEW really comes down to, all right, it's out of the money, again, out of the money calls, okay, and out of the money puts. And what are we actually comparing with SKEW? What's termed implied volatility. So what SKEW really amounts to is the differential between out of the money put implied volatility and out of the money call implied volatility. Okay, yesterday we actually had a 170 SKEW. I'll tell you, frankly, SKEW is only calculated at the end of the day. Today, I probably would think it would come down, maybe quite a bit. Doesn't make a difference. A 170 SKEW is indicative of, one of 2 things. Either traders are hedging, okay, or traders are loading up on puts. Either way you want to look at it, it's a very nervous marketplace. So when I turn around and I say like, oh, look, man, this market starting to crack a little bit, all right? The cracks are actually forming in that the mega market caps, they're kind of being undermined. I mean, they're literally, you're seeing sell side in Microsoft. You're seeing some sell side in Apple. Even though Microsoft's up today, it doesn't make a difference. It hasn't recouped anything. And the S&Ps came back, but the S&Ps are coming back strictly on the back, basically two underlyings. I know, Netflix is up today. Netflix, please. What do you have? What do you have in Netflix, huh? What, about a $250 billion market cap? It's absolutely nothing. Okay? It's a nothing burger over here. Everything right now is about volatility and market cap. And Nvidia, okay, it's got the hot hand. The only question is, how long is that hot hand going to last? Because if you have so much as a flinch to the downside in Nvidia, I know a lot of people are thinking it's impenetrable. Okay, the risk right now just simply isn't worth it. When you have the S&P 500, okay, reliant on maybe one or two products, it's extraordinarily disconcerting at this point. Again, look at the SPX, okay, know where the lower edge of the expected move is, 49.61. That very well might make an appearance again on Thursday or Friday of this week. Okay, but rest assured, some of the volatility that we saw in yesterday's trading session, and obviously the bounce back today, this is far from over. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.